NBC Bay Area News starts now.
Right now at 6 o'clock, the wild ride on Wall Street, and it's not a good thing. It impacts millions of investors and people with the 401k accounts. Thanks for joining us. I'm Raj Mathai.
I'm Jessica Aguirre. Now, if you have money in the market, it is a nail-biting time. A month worth of losses have lots of people in the Bay Area wondering what's going on and why the market is so jittery, and really, what happens now? NBC
Bay Area's business and tech reporter Scott Budman joins us with some answers. What do you know, Scott?
Well, Jessica and Raj, the market has been on a roll for a few years now, but after a 5% drop in the month of January, February started with another steep loss. So is it time to get out of stocks or time to take a deep breath and think about the long term?
Stocks in February picked up where they left off in January with a big loss. More than 300 points down on the Dow, more than 100 points lost on the NASDAQ.
Fear is kind of at a high.
But San Jose financial planner Hilary Martin points out that even a month of steep losses does not a full-blown crisis make, especially if you consider the strength of local tech stocks on the NASDAQ.
Well, I think that you have to get really some perspective as far as the NASDAQ is concerned. You know, the NASDAQ had a 38% return last year, and so this year is a slight decline, but it's really just a short, brief, very small sell-off.
Case in point, Google, down nearly $50 a share today. But according to its recent earning report, Google is making a ton of cash, hiring, and generally firing on all cylinders. And Facebook, a sharp loss today. Just last week, a very strong profit report.
The first thing I do is ask them how long their investing lifetime is, and most people don't think about it. For a 45-year-old investor, our life expectancies are really 95, 100 years, so you've got 55 years left in the stock market. Are you going to do this every day? Are you going to let market emotions overcome you?
So the short term may be scary, but give it time before pulling the trigger.
Now, another thing making Wall Street nervous is the decision made by the Federal Reserve to put less money into the market as a stimulant. In the short term, that takes money out of the market. But it shows us that the Federal Reserve believes our economy is getting stronger, and that's good news. So, Jessica, we'll give this some time. Back to you.
Okay, thanks, Scott.